Perfect. Awesome. So, hello everyone that's watching. We are here with Paul Kim. Paul is an experienced entrepreneur. He's the CEO of Pixar, and he's got a few other ventures everywhere. So, Paul, if you can just give us a quick intro. But before you do that, this interview video is basically just we're going to touch on the subjects on if you have a business idea, but you only have a limited amount of capital and resources, where do you begin? And I think that's the main questions. And then we'll just touch on some other important aspects, the characteristics and all of that. So stay tuned till the end for some valuable input. So Paul, if you can just give a quick intro so that the audience also get to know you better.
Yeah, sure. My name is Paul. I am actually not the CEO of Pixar anymore. I used to be the CEO of Pixar. It's a company that specializes in financial health for blue-collar workers. Our tagline is simplifying wealth creation for low-income employees. I handed over September of 2020, and then I became CEO of Redemptive Capital. And Redemptive Capital is the largest shareholder or investor in Pixar. And my day-to-day job today is to do more of or find more Pixars in this world, invest in them and support them in order to achieve our vision. Our vision being to help blue-collar workers or low-income employees of low-income South Africans and their families flourish. My day job ranges from investing to supporting the businesses directly. I actually have some day-to-day responsibilities in some of the businesses as well.
Well, that's awesome, and it's a privilege to have you here. So let's get to that big question. We've got so many burning entrepreneurs that they just want to start a business, and everybody, the entire lives dream of having their own business and running their own big business and their own Apple, Google, whatever. And it's always this big dream, but it's taking the first and necessary steps that are the most challenging. So if I'm an entrepreneur now and I've just got this idea, I'm still at the planning and dreaming phase, and I want to start the business, but I only have, for example, let's say 5,000 Rand. Where do I begin? And what are the best tips you can give me of where do I begin and how do I execute it?
Yeah, so there's a lot of kind of assumptions hidden in that question. So let me hopefully try to tease those out to make sure that people don't hear the wrong thing. So firstly, it does depend on whether you're currently employed or not. You can imagine someone who's got a salary coming in, not having to worry about putting food on the table is a very different situation to someone who doesn't have a job and this is their last 5,000 Rand and they need to get going with that. I'll be honest, I've never been in the latter situation, so I have no idea how you start from that position. So I'll more speak to someone who comes from the background of having an existing job and wanting to move over into entrepreneurship. And before we get into the money, the reality is money at the end of the day is just a tiny, when I say tiny, I really mean tiny part of starting a business. There's so much else to it that you need to be aware of before you commit money or capital to your idea. So you can imagine if you wanted to start SpaceX in 5,000 Rand, it's probably too little. If you wanted to start a spaza shop, it's probably sufficient. My point being, unless you understand the business that you're trying to achieve, the money part of the equation is almost nonsensical to address. Having said that, though, there are some people who start off with, I've only got 5,000 Rand, I want to do something, meaning starting any business is more the goal than a specific business. And there, I reckon, my short answer to that is go through as many ideas as possible and see if which business fits within the 5,000 Rand category. And I reckon there will be a couple, and then decide which one you think you'd probably enjoy the most. If you're starting the other way around, and say you actually have an idea, you have a specific business in mind, and you've only got 5,000 Rand capital, the approach I would take there is to really understand your business first that you want to create. So the 4 questions that I use. So who do you want to serve? Because at the end of the day, a business is only functional if it has clients. So who do you want to serve? How do you want to serve them? And that specifically speaks about the products and how the products are delivered. So let's say it's food, retail, Do you want to do it in the Woolies way, or do you want to do it in the ShopRite way? Those are, you can imagine, very different approaches to doing retail. What do you need in order to serve them? So this is now speaking in terms of the resources you need in order to serve them that way. And then what do you have and what do you still need? And what do you have under that element? And the money would be 5,000 Rand, but you can imagine if you've gone through this exercise, there'll be time, expertise, intellectual property that you may or may not have, and so on and so forth. So that's the way where I'd start. And then most importantly, once you've got that framework up and running, and you might come to realization, you probably will come to realization that 5,000 Rand is too little. Unless you've got a services business going where you're selling your time, 5,000 Rand probably doesn't get you much. And so you've got to be very, very careful how you spend that 5,000 Rand, if that's all you have. Yeah, I think that would be my first at an answer. 5,000 Rand is not the important part. Understanding what you want to do with the 5,000 Rand first is probably the most important part to get out the way.
Yeah, and I think that goes on to the question of, when do you know as an entrepreneur that as a business idea, whether this idea is a good idea, great idea, or bad idea? And, you know, from what I've learned, I don't know how it works in different industries. I know more of the tech space, but you have to start very, very lean. And that's a mistake that I've made. You know, where you see, okay, even if it's 100,000 Rand or a million Rand, cash can be burned so fast if you don't properly stay lean and do the budgeting and all of that. So it goes back to, if you believe you have an idea, go very lean in. And that's where the book, The Lean Startup, is such a great book. But go in lean and test your assumptions. If you think you're solving this problem, test it. And yeah, what would you add on that topic of starting lean and working with what you have in order to just build a scaling engine from there and test the assumptions and move on forward?
Yeah, so the Lean Startup, actually, if I remember correctly, I was probably one of the first to have bought it in South Africa, because I bought it while it was still on pre-order, and I got it shipped out to South Africa. Fantastic book. I think two key concepts that you need to be aware of. The one would be business working backwards is being able to sell a product for more than it costs you to manufacture, and then being able to repeat that and scale that in a way that covers your overheads, right? So if you work back from that, any product or service that you sell is a function of a whole bunch of different underlying parts and assumptions. The Lean Startup is really important because a lot of the times you don't have the resources, both in terms of time, money, and skills, to be able to put out one experiment, that one experiment being build the product and see if it sells. So in order to reduce your risk, you want to figure out how do you speed up the learning relative to the resources that you have that point you in the direction that a product can be sold at the end of the day. So if I remember correctly, the example that I'm going to use now comes from when the iPod first launched. You know, one of the things that Steve Jobs didn't have to worry about is the assumption whether or not people would be willing to listen to music with their headphones on or earphones on in the streets, because the Sony Walkman had kind of figured that out on behalf of society. You can imagine the Sony Walkman had to figure out whether people would be willing to look like an idiot, or back then I assume it would have been to look like an idiot, because that wasn't commonplace in terms of putting the headphone on. And so you've got to systematically work through all the kind of underlying assumptions of the product that you want to serve, and figure out what is the most cost-effective way of testing whether or not people are comfortable with that idea. So the quicker you get to a point where you can actually sell a version of your product to a client, your intended client, for a sum of money, the better. But in the event that you can't do that, you've got to look deep and hard to figure out what are the key things that you need to test out in order for the idea to make sense for a client. Another example, if I remember correctly, is Zappos, the online shoe delivery. I think, you know, even 5-10 years ago, it would have been unfathomable to think of buying shoes online, because how do you try them on, right? And so the founder of Zappos, I forgot his name now, but he didn't think about setting up a website. He didn't, or he did, I think, set up a rudimentary website, but no e-commerce platform, no payment collection of sorts, no CRM system. He didn't even buy his own shoes. Literally, what he did, if I remember correctly, was he went down the road, took pictures of shoes, put it online, and waited for orders. And he made zero money on that first deal, and it was completely irrelevant whether they made money or not, because the thing he needed to test was, are people willing to buy shoes online? And from that, after having tested that, after I've getting the first couple of orders via email, very painful transaction, because you EFT or whatever had to be done, proof of payment, and then sending it out. You can imagine, oh, there's potential here, and now you've got to figure out how to make all of those steps more efficient so that you've got a real business there.
Yeah, no, that's great. So let's get to a practical question. So let's say I only have 5,000 Rand, but I realize I need 50 or 100,000 Rand. Where are the different types of funding? So what are the different types of funding that I can consider? So in the Silicon Valley in the US, getting funding is way easier than in South Africa, for example, especially as an early stage startup. So how can I access funding for this idea? So let's say I've already tested it a bit and there's a need for it, but I need more capital to make it work. So what are the different aspects that I can consider as a very early stage startup or entrepreneur with my little side hustle or business?
Yeah, so the easiest place to start is with yourself. I think a lot of entrepreneurs when starting out feel a sense of time pressure, but again, there you need to be objective about that, because if there isn't any time pressure and you can save up that capital yourself, and I know that's a very boring answer, but that does mean that you're not giving away shares. You are not having to get other people involved, which if you've never done it before, you don't realize early on that is a massive communication overhead to keeping people aligned and on the same page as you. So if you can save it up yourself, and it takes you a couple of months or even a year, as long as you are happy that this idea is in a 3-month opportunity and then it completely disappears, then saving it yourself is a great starting point. It also makes you, what I found is that you're a lot more frugal with your money when it's your money that you're spending instead of other people's money. And do you really need that HD projector at 8,000 Rand, or can you get by with that 4,000 Rand projector? You can obviously sell stuff as well. I mean, that's again, I'm being very practical here. Have you looked around your house, your parents' home? Is there stuff that you can sell to fund this new opportunity? Now, moving outside of that, you can move to friends, family, and what they call fools. I don't like the term, because someone who's given you money, you need to honor that, and it comes with certain responsibilities. And the only thing I would suggest about friends, family, and fools is that you set the right expectation with them. I would typically say, if you aren't happy to flush this money down the toilet, then you probably shouldn't give it to me. The last thing you want is money destroying close relationships. It just makes that Christmas dinner just unbearably painful. The other interesting option before you get to more formalized funding channels is to take credit either from, and I don't mean banks, because that's what I think everyone would think, borrow money from an official institution, but you can actually maybe get product on terms from a supplier. So that's one form of credit. And if you are selling a product and you're just, what you bring to the table is a different flavor of doing that, maybe you've got an interesting distribution channel, you can find a supplier that might be able to give you product on good terms, repayment over 60 days or 90 days. And then that's one way of starting the business: sell the product, get the money in, pay the supplier back, and then you've got margin to play with. And then you can do the same on the other side, go to the client. If you've got a product you like to build, you can pre-sell it to the client and then go figure out how to build it. Crowdfunding, to some extent, is that. It's a really cool way of getting commitment from clients beforehand. In return, obviously, you would have to give them some sort of a benefit, either in terms of reduction in cost or some sort of special once-off or limited edition signed paraphernalia or interviews with you as a founder, whatever's the case. But the idea is you can get credit from your clients or from your suppliers or from a bank or a third party who's got nothing to do with the product or the supply. And then you get onto your typical investment, and that can still be from friends, family, and fools. It's just that it's just about having a formal investment layer to that. So they are actually purchasing equity in your business. There's certain responsibilities that come with that. Yeah, in this country, the early stage funding is very difficult to get access to, and so you're going to have to tap into people with money. It's very. I can't think of any formal institution now that's quite doing well and prominent in the very early stage investment scene. We're trying to break that mold for a specific type of startup, but we don't only give money, we actually provide services as well in order to de-risk the business that we're investing in. But it's very difficult to get hold of that. So your best bet is to find a person via someone else in your network, and to get them invested in and interested in your startup. And then last one, for some of you who are more doing products and services with a social impact angle, the other opportunities to look at grant funding, either from government or semi-government institutions, or more NPOs, PBOs that have a vested interest in seeing outcomes in your specific space. And there, the grant funding is free in terms of there's no equity or there's no repayment, or it might be a soft loan, so you kind of do have to pay back with interest. But let me tell you that is rigorous in terms of the paperwork and the time. So you're always giving up something in return for funding. Very rarely is it free with absolutely zero strings attached. And you just need to determine what you're willing to bear in order to get that initial capital in.
Yeah, those are definitely some great points. I'd listen to that again, because yeah, it's for different startups. I mean, especially if you can get the grant funding, that's awesome, because equity is valuable, and the earlier you raise money, the more equity you'll have to give away, and at the end, you know, equity is very valuable. So yeah.
So on that, let me push back there, because I think it really, like you just said, but I want to double click on that to say it really depends on the startup, because free money sounds great until you realize you also needed someone vested in your outcome. And sure, you know, having someone invest in you means that you give away equity, and this is where this idea of smart money comes in. You definitely don't want to just take money, because the person who's investing in you, you're wanting to take his investment not only because of his money, but because of him. So in some scenarios where you realize, actually, I could have all the money in the world, but that doesn't solve my core issue, you might actually want to rather go the equity route and get funding from an angel investor who has a very specific set of connections in the industry that you want to get into. There it makes more sense going for equity, angel investor, even a decent chunk of your equity, rather than free money, because free money just doesn't get you anywhere in the space that you want to play in. So you really need to, again, let's go back to what I said earlier, unless you know what you want to do as a business and all those downstream questions, it's very hard to make these decisions, right? Because how do you know when to take grant funding or whether you should go knock on the door of your family?
Yeah, that's a great point. And at the end of the day, so equity is very valuable, but you'd rather want 10% of $1 billion or rand company than 100% of a company that failed. So there's many aspects to consider, and I think that where the money comes from is extremely important. And for those looking for external investors, we actually did a video with Clive Butkow on a previous video where we touched on some of those aspects. So you can have a listen to that. So just remember to subscribe to not miss any of these future videos. But back to the point, and still on the funding, what I realized in my life is your network is really your net worth, not just with money, but also the lessons you learn from your network and the people you meet and the new ways that you learn. And also money comes with that sometimes. But I'd encourage anyone to just build a massive network, a strong network, and focus on relationships, and not always just taking, but also giving. And that's what I realized helped me a lot. in learning, and I mean it's still I'm still learning, and mentorship is that's amazing. So reach out to people that you find inspiring. Some of them might ignore you, some of them might not. I remember what I did about 2 years ago was I really wanted to expand my network. Got on LinkedIn, focused on my LinkedIn profile. LinkedIn is a powerful tool, and I just started connecting with people I found really inspiring, and CEOs of this or founders of this. And I just wanted to learn from them. And I messaged them and said, "Listen, here, can we meet up? I'd love to learn from you." And 1 in 10 probably replied. So I got 9 out of 10 no's or ignores. But that 1 out of that 10, we still speak to this date, and I've learned amazing lessons. So that's maybe a tip for anyone that wants to grow their network. Leverage LinkedIn. Then my last question for you, Paul, is you can use your personal experiences or personal stories, but some of the characteristics of a successful business, if you can just run through some of them, and also just if you look at your own journey with Pixar, Redemptive Capital, or other businesses, what were specific things that you look back and you can tell yourself, I probably did this right, or this worked for us, this did not work for us. So some of those topics that you think could help the general audience that wants to start and scale their own businesses, some of the key points that you'd just like to share on what is important, and what are some good tips to end off with as characteristics or practical tips?
Yeah, so I mean, sure, this would be a very long discussion, but different investment companies obviously have different approaches to finding or what their spits out at the end of the day is a good investment. A lot of the times, team would be up there, the market opportunity, and so on and so forth. We start with the team, and not necessarily the skills of the team, because we actually bring a lot of skills to the table as a group, and that's part of our value proposition, is that whatever you lack, we can basically fulfill. But the one thing I look for is perspective. I think Peter Drucker was famous for saying, strategy and culture eats strategy for breakfast. And I think you need to read that very carefully, because it means one thing, but I don't think it means the other thing. I think it just says that whatever culture you have is just going to overtake or drown out whatever strategy you want to implement. So if your culture is a very frugal one, it's going to be very difficult to do a private banking model off of that, because in private banking, you just need a different culture to support strategy for a private banking model. My addition to that would be to say perspective is trumps culture any day. Because if you can't see reality and the opportunity for what it is, you just don't know you should even pursue it, right? So we have lots of case studies around this, Kodak being an interesting one, right? They actually had the digital camera first, but they just couldn't see how the digital camera could be bigger than their film business. And that is not a cultural issue. That is not a strategy issue first. It's the perspective issue. They couldn't see that first. And because they couldn't see that, they couldn't change their strategy. They couldn't change their culture. So I look for a team or a person that has a nuanced perspective on the opportunity that they are tackling, and that can bend themselves to the reality of what they're facing. What I mean with that is, everyone that starts with a business is trying to tackle a problem. And when you start tackling that problem, you've got a very 2D black and white perspective on what the problem is. You probably had that when you started, Ihu. You had your perspectives on what you thought the problem was. But then you got stuck in and you realized it's a lot more nuanced than you originally thought. And so that 2D black and white photo becomes a 3D full color sculpture. And the 3D full color sculpture allows you to create a fantastic business. The problem is you need to be able to bend yourself to the reality, meaning you need to take what reality is telling you, the feedback from the clients, and you need to continue pivoting, learning, and updating your view of the world to make sure that that business is actually going to flourish. Because your perspective determines, the updates to your business model, the updates to your business plan, and so on and so forth. So my number one criteria is the people involved, whether or not they've got a differentiated understanding of the market they're going into, and whether or not over time they can learn and update their perspective to match what is actually happening in the industry. That would be my first one. Related to the team is whether the team can grow the team. You want to back someone who can attract other talent to the group, because ultimately a business is not just made out of one person. So if you've got someone who's brilliant, who really understands what's going on, but just can't work with others, I probably wouldn't invest in them, because that won't go anywhere, or there will be a blow up at some point in time. Then I would go into IP. So the team looking at the problem needs to convert their understanding or their perspective into some sort of solution. And the solution is made up of a range of underlying blocks of IP. So for Pixar, for example, in order to solve financial health amongst blue collar workers, you actually have to solve for multilingual support. It's got nothing to do with financial services, but it's got everything to do with building trust with your clients. And without trust with your clients, there's no way in hell you're going to sell them any financial services. So as a result of that, instead of telling the clients they need to speak English or learn English, we figured out how to do paper, so paper forms, WhatsApp, SMS, client support via phone call, presentations, all of that in 3 languages. Again, does that have anything to do with financial services? Zero. But is that what creates trust? Yes. So we tried to solve that. And so that's a key building block of IP within the Pixar group at this point in time. So can they translate their understanding into IP? And then not only IP, can they create a flavor with it? So what's the nuanced version of their product in the market? So, burgers are burgers, right? Well, until you start eating them and you realize there's a whole range of different burgers out there. Is it a Hudson's? Is it a Rockamama's? And those are all excellent because they have a different flavor, style that they're going out with into the market to attract a specific type of audience to them. So core IP is one thing, but translating that core IP into a flavor that gets presented to the client is the next. And then the last one is the fuel. And so if you're your own business, you obviously need to support yourself, or you need to bring revenue in. And then the other one would be investments, so external or internal investments that you would look at. And those 4, I think, can create a fantastic business. So it's not your typical, what is the size of the market and all of those things. I think there's an opportunity in many different markets and many sizes of markets. You just need to downscale their investment and make sure that it's relevant to that opportunity. But yeah, team, IP, flavor/taste, and resources, and you're good to go.
Well, yeah, that's awesome. Thank you so much, Paul, for your input and knowledge. I'd watch this again and again and again. I think there were some really valuable insights that you gave us there, so thanks a lot. To all our users and community audience watching, don't forget to join the Telegram and WhatsApp groups as well. We share a lot of content there, business tips, share tips, stock picks, all of that, research, whatever you name it, on those groups. We'll put the link in the description. Follow Paul Kim, watch Pixar, check Redemptive Capital. Thank you so much, Paul.
All right. Thanks, Ihu.